Thanks everyone for coming to the Cashflow in COVID webinar organized by our sponsors, Allied Legal, in collaboration with Interactive Accounting. I'm Atula Boguda, lead organizer of Melbourne Silicon Beach. This is the Silicon Beach event. So thank you to all of you all joining us from all over the country, including lots of you who have joined us from Eventbrite. This is being recorded and the recording will be available on all the meetup pages for this event, which you can access after the event in the past events, and also shared with Eventbrite people and all of Silicon Beach. So before we start, I want to acknowledge the traditional owners of all the lands from which we join all over Australia, and acknowledge their leaders, past, present, and emerging. We have a lot to learn as we grapple to these effects of this pandemic and go forward. There's a lot of innovation needs to be done, and we have a lot to learn from Indigenous leaders and past generations. I want to, before I hand over to Inda from Allied Legal to start the proceedings, I want to remind you we have our pitch night on the first Thursday night of every month. So the next one is on Thursday, 1st of October. I will put the link in chat. Feel free to put your links, LinkedIn details and all on chat. I put mine and I'll put the link to the pitch night. There you can, you stand to win a prize when you come and do a pitch, 90-second pitch from Allied Legal, and that is a 30-minute consultation with them. I just got an email from the person who won last month's pitch Allied Legal prize, and he said it was so very helpful. So yeah, don't miss that. I will put the link on the chat. Now over to Inda to start the proceedings.
Yeah, thanks, Atula. Appreciate that. Hopefully you can all hear me. It's Inder over here talking. And by the way, we're glad to be sponsoring Silicon Beach. I think it's a fantastic kind of grassroots platform that connects founders to the ecosystem. And I always say it helps bring ideas to life. I had a chance to participate in one of the pitch nights a couple of weeks ago, and it was really good to kind of see the progression of some of the founders go from one time to the next and kind of start to grow. So I think it's fantastic. By way of intros, I head up the growth advisory for Allied Legal, and it's the cornerstone really in helping other businesses or startups that sell to other businesses to land more clients. Now, it really depends on what stage, will depend on the type of help we provide, whether that's around helping with validation or in fact actually helping with landing clients to grow revenue. My background has been in building up sales teams around the globe, in Canada for 10 years. And I also spent 10 years on the US side and also building up teams in the Asia Pacific region. Most of the work I've been doing has been in the tech space and personally selling into the mid-market and enterprise sectors in various verticals across Australia. Rahul, say hi. You're the lawyer on the team within Allied Legal. He leads our legal practice and providing legal expertise to startups. Rahul and I actually joined forces in March. We thought it would be good not only to help with establishment and structure and capital raising for some of the startups, but also to help with expansion and growth. And we find that's been a very good combination that's been adding value to the community. Is there any additional words you may want to say, Rahul?
Yeah, sure. So hi all. In terms of the legal expertise that we cover off on and helping startups and innovators, it's everything from sort of bringing founders together to the day-to-day legal needs, such as raising funds and issues with employees and employee incentives, and all the way through to exit. Should the business be lucky enough to exit out, and now, on that note, it's today's topic, and we thank Interactive Accounting and Gareth for joining us on that. In terms of cash flow in COVID is really topical, because even from a legal perspective, we have seen during this phase that obviously cash flow and cash is king, and so really looking forward to the insights that Gareth has to share.
That's great. Thanks, Rahul. And Rahul and I caught up with Gareth a little over a month ago. And it was really an interesting conversation, because the more we were talking, the more my ears perked up and started listening to some of the things that Gareth was saying. And he really brings a no nonsense and practical advice. And the more we started talking, we said, you know what, this is something we absolutely wanted to bring forward to a webinar. I think there's others out there that should hear some of these things that are happening as well. And we know this landscape continues to change and evolve, but cash is important, as well as cash flow, right? And so what I found was he actually brings good practical advice and that no nonsense approach. Now, in some cases, you know, this may be for those businesses that are operating, have revenue, have teams, but in some cases, I think it's also good to know what to expect as well as you listen to Gareth in Interactive Accounting. Gareth will talk a little bit about himself. He'll speak a little bit about interactive accounting, and then we're going to dive a little bit more into cash and cash flow. Feel free to raise some of the questions within the chat. And if there's an important one you want to kind of bring up, please make it as interactive. But we will have some time at the end too for some more Q&A. So Gareth, over to you.
That was a great intro and pun saying let's be interactive. Given I'm from interactive accounting, so I like that. Hi everybody. Yeah, I'm just gonna share my screen so you can look at my slides instead of my face, which is a win for everybody. Cool. So let me just play. Cool. So thanks for the warm introduction. Today, I'd love to kind of have show a high level view of some things you should be thinking about either as a sole trader, entrepreneur, business owner, or, you know, leading a team, as to what things are available that you can, you know, use to manage your cash flow during, you know, as it's been called, a once in 100-year event. I'm obviously based in Sydney, as was alluded to earlier, and for all our people in Victoria that are listening, we're with you in support. We have a team in Melbourne who are affected by this as well, and we hope that your onerous lockdown ends soon. Cool. So just a little bit about me. So as I mentioned, I'm a Managing Director of Interactive Accounting. We're Sydney and Melbourne based. We're a team of about 20 at the moment. So I've been a director of the company for 8 years. But what I really enjoy doing is being a VCFO and advisor to early stage business. You know, early in my career, I did a lot of tax and stuff like that. And whilst that's, you know, rewarding in one sense to try and, you know, save you money that's going to the tax office, I thought there was more to it than this. Kind of found my way into dealing with early stage and tech startups. It's a lot more fun. So I've been in the industry for about 15, 16 years. I'm surrounded by females at home. So it's me and against the girls. I've got two young daughters, 7 and 4. And I thought I would throw in an anecdote that I have some of the worst dad jokes you will ever hear. So if you ever see me one day, by all means, ask for one. And I've usually got about 6 on tap at any point in time. Anyway. Cool. So some of the things we're going to go through, we're going to talk about cash flow and why it matters. We're going to talk about some of the government stimulus that has been available and it still is available. We'll talk about some other grants and incentives that are out there in the marketplace for early stage business that are common and can be accessed relatively painlessly. We'll talk some sales and BD tips. I think Inda will have a lot to add here as well on the sales side. Just things that I'm not a sales professional, I'm obviously an accountant and advisor, but some of the things I'm seeing that are working really well with the companies that we work with and some of the things that aren't working well. We'll then flick from a revenue and income side to the cost side and how to get your costs under control. And then we'll have a brief interlude at the end on some ways to pay people less and incentivize them in other ways towards the end. And we'll try to keep it casual and high level while still being informative to you. By all means, as the guy said, any questions, let me know. Cool, let's dive in. So why does cash flow matter? I think this seems like a really basic question, but you'd be amazed how many businesses, not just early stage businesses, but businesses as a whole struggle with this concept. Is that my P&L looks really nice, you know, I'm making money, but like, where is it? Why isn't it in my bank account? You know, why am I struggling to make payroll each month? Why are the bills becoming difficult now to meet? So I think it's hard during like non-pandemic times, right? It's always been a struggle, especially in the early days for businesses. I think, depending on which stat you read, like there's 2 out of every 3 businesses fail, X% fail in the first 3 years. I think only one in something like 1 in 7 or 1 in 8 businesses last 10 years. You could find a stat for everything you wanted to say. So I think one of the key reasons it happens isn't because there's not a good product. It's not because there's not a good team. It's because they run out of cash, right? And so we'll dive through ways where that can be avoided, especially in these trying times. So from a cash flow 101 point, looking at your P&L, your profit and loss statement, looking at your revenue, looking at your expenses, they're all important and you should be doing that. If you don't know what a profit and loss statement is and you're running a business, maybe do some Googling or get an accountant. It's probably some good advice. Good profitable businesses still have these struggles, and really diving in and understanding the key flows of your business. So cash coming in, cash going out is really important in order to last the distance and get to the point where your business can really take off, right? And there's my attempt at being a millennial, saying money in, more money in versus less money out equals thumbs up. So yeah, cool. So some government stimulus measures. So I'm sure, unless you're living under one hell of a rock or a mushroom, is that that there's been significant government assistance, both state and federal, actually local, state and federal, during this crisis. I think the first key stimulus measures were issued by Scott Morrison way back in March. JobKeeper is like, anytime you read The Age or the Sydney Morning Herald or whatever your media of choice is there's always a story about JobKeeper, whether it's changes to it, whether there's people rorting the system or anything. It's always on the front pages of the newspapers and therefore on the front page of their website. So JobKeeper 2.0, as it's been dubbed, is about to start. What that covers is that if your business has suffered a 30% or more drop in revenue and you either employ people or you are a sole trader, and you can prove that drop has happened, you are entitled or potentially entitled to what was $1,500 a fortnight per employee and per eligible business participant. That number is dropping from the 1st of October to $1,200 for a full-timer and $750 for a part-timer. What I would really suggest here is that if you're financially, you consider yourself financially literate and and knowledgeable in this area, by all means, do it yourself. If you are not, or you're not sure, pay someone to do it. I know at this time, it's not a pitch for my business. We help look after it for our clients, but is that we are seeing a lot of compliance activity by the ATO. For example, we've had one where we're doing a JobKeeper audit for one of our clients, and they have 3 people. Okay, so just because you might think that you're a small operation, is that close enough is good enough. The ATO will still try and make sure that you're following the rules to the full extent of them. So yeah, but it is definitely a big benefit to a lot of businesses that have accessed it, and you should keep an eye out and make sure if you are eligible that you are claiming it. The Cashflow boost of business was the second one. So that was actually the first announcement that Scott Morrison made way back in March, and so that covers any business that has any employees, or if you're self-employed and you're paying PAYG, so you might be in a company, a trust, a partnership structure, and you're paying wages, is that the ATO are giving you a boost on when you lodge your BAS. So I think key out there is that a lot of that has already happened, and you might be going, why are you telling me this now, Gareth? And so the reason is that some people, bless their souls, are a bit behind on their compliance work. So don't not lodge your BAS because you're scared of what is owing on it. Lodge it, and the ATO will and should apply the cash flow boost if you are eligible. And for a lot of small businesses, this effectively can negate a large slab of your BAS compliance cost throughout the year. So from the June quarter, from the September quarter onwards, right? it can be very helpful. We have some clients who haven't paid a BAS in 6 months, which is a great help for them. For anyone who might have a bunch of employees and be, unfortunately having to pay payroll tax and being over the thresholds there, Victoria have been really great in this area compared to other states in Australia. No payroll tax would have been payable last year. They've now put a deferral in place for the first few months of this financial year. We'll talk more about deferrals later and how they can be dangerous, but there is definitely some help there, and you should definitely do some digging if you're not across those. And just recently, with the latest lockdown, the Victorian government, in conjunction with the City of Melbourne, has announced another large stimulus measure. I think it's about $300 million in total, which will cover both basic grants for businesses up to $10,000, I think it was, for general, if you can prove that you've been affected and that you are you have a presence in Victoria, is that you could be eligible for that. And then there's more targeted relief at hospitality, restaurants, etc., that have been largely affected by this, so they can hopefully weather the storm and come out the other side. There's a lot of stuff going on at a local level as well. Too much to go through for this webinar, but there's plenty out there, and I encourage you to do some digging if you haven't done so already, because the last thing you'd like to find out is 3 months down the track from a friend or a colleague that you were eligible for some things that would have helped your business immensely during COVID, and you didn't access them because you didn't know about them. So let's just be informed as a group, and it'll be as helpful as it can be. Cool. All right, let me hit the right button. Oh, hang on. All right, cool. So over and above specific COVID-19 relief, there are 2 or 3 main startup-friendly programs that exist. So for any who may not be across them or that, we'll just go through them in a small amount of detail. So the 2 big ones that we see a lot of startups accessing are the R&D tax incentive. Oz Industry was gracious enough to extend the deadline for the 2019 year through to the 30th of September. So you've got, 2 weeks in order to get an application in. Typically, those applications would have closed back in April, at the end of April, but they gave a nice 5-month extension on that. So that if you have undertaken eligible activities, we'll cover it on the next slide, for that financial year, which seems like a lifetime ago now, back where the world was relatively normal in June 2019 and before, is that you still could have an opportunity to lodge. So check that. And obviously the year ending 30 June 2020, applications are now open as well and will be until April next year. So the other one that we see a lot is companies or businesses that are selling their wares to overseas customers, whether that's in person, like with a physical presence, or online through like an e-commerce offering or a software type business. Is the export market development grants can be quite lucrative and can give you quite a decent chunk of cash back. And then further on, for more for a more detailed grant process, is Oz Industry also offer accelerating commercialization grants. I won't go into them in detail today. It's good to know that they exist and that you can check them out. But what I would recommend is that if you do go down the route of an accelerating commercialization grant, is that you seek out a grant specialist, of which we are not, to help you with your application, because it is a long and time-consuming process, and you'd like to, obviously, if you're investing all that time, you'd love to get a good result. So yeah, and I've just put I put it in quotation marks, but it's effectively my words. And the thing is, this is more from a compliance perspective. So just because we're in a pandemic doesn't mean the authorities won't be enforcing compliance. I think some people sometimes get in their head that because we're in this like difficult time at the moment, is that like, the ATO, Oz Industry, Oz Trade, etc., will stop enforcing the rules, or they might just be a bit lax about them. I think this is a time where it's even more important that you are diligent in the work that you do, in terms of what you apply for and understanding the rules, because with things like this, we've seen, you know, a great increase in cybercrime. We've seen an increase in people trying to take advantage of situations for their own benefit. And we'd hate for any of you to get caught up in this, even if you were, you know, attempting to do the right thing. Is that follow the right steps, get the right advice where you need it, and make sure that you stay on the good side of our governments. So yeah.
Gareth, there's a question that came up on the
Yep.
on the chat. I think it was one of the slides just previously that, right?
Yep.
Alexar was asking a question saying what presence in Victoria means. Presence in Victoria.
So that you would need to prove that the business either has either is, you know, based out of a like a Victorian address. So you'd need to show. So for example, they would ask for a document like a lease if you had an office, or like an agreement, say if you worked out of a WeWork in Victoria. If you ran your business from home, you would likely need to communicate that and show like a council rates notice or a water rates notice or something like that. But effectively being your registered place of business would need to have, I was about to say needs to have a 3 in front of the postcode, but I think that isn't just Victoria, right? And so, yeah, you would need to show that the registered principal place of business is in Victoria. And there's multiple, as I said, there's multiple ways to do that. I just went through that grant process for a client, and we ended up just showing a copy of their lease on their office, and that was sufficient. But the government does give a few examples, and if you don't tick any of those boxes, they are available on the phone to have a chat through. Yeah.
Does that help, Alex?
Good question though.
Oh, perfect. One more question. Has the ATO doubled their staff to enforce compliance?
They haven't, as far as we're aware, we haven't seen an increase in like volume, but we also haven't seen a decrease, right? So I'm sure for anyone who reads the Financial Review or any of those publications, is that the last 12 to 24 months from an R&D perspective in particular, has been under scrutiny to make sure that people are being compliant, and that you know the right level of, you know, or the right level of innovation is being rewarded, and what isn't eligible is being, you know, picked up. So I don't expect that to decrease. I don't necessarily expect it to increase either, because it was already increased. But I think for like other areas, so we're talking like JobKeeper and things like that. If you look at what's happened historically with other incentive programs that the government has run, at a certain point, and this might be the cynic in me, at a certain point, the budget deficit at a federal level is going to become an election issue. Or, you know, while we're in the middle of a pandemic, it's not really, it's being deemed as, you know, going into debt isn't the end of the world, but at some point, especially if we have a conservative government in office, it will become an issue. And so when that happens, typically, the government turns to the ATO and says, go find us some money, right? And so what that means is they'll go, here's $100 million, go and find us 5 billion, right? And so effectively, it'd be nice if we could all invest, you know, and get that kind of return. But yeah, I would expect, having, you know, worked, you know, in and around the tax office and worked, you know, for clients with them, is I would expect in the next kind of year or two to see a real ramp up on JobKeeper and other, you know, incentive programs. Maybe not necessarily R&D, because as I said, it's already at a high level, but yeah.
Cool. Thanks for sharing that.
Sorry, kind of long answers, but yeah, not necessarily doubling. I don't think they have the resources to do that at this stage, thankfully. Cool. So just going into a little bit of detail about the R&D tax incentive, for those who aren't across it, what it can equate to is a 43.5% refundable tax offset. Okay, so speak English, Gareth. What that means is that normally a company would spend $1, and effectively that gives them a 27.5% or 30% benefit, which is their tax rate, right? So in this case, you kind of get 1.5 times. So for every $1 you spend on eligible R&D, you could get up to 43.5 cents back. If your company doesn't have, and I say company because you need to be a company to apply. If it pushes you, it means, so say you don't have any revenue, or yet you're running at a loss because you're growing your business. If that pushes your tax position into a refund, the ATO will actually give you the money, right? It's not rather than it just carry forward to be losses, etc. At future times. So it can be quite lucrative in that respect. A lot of businesses access this. It's a two-stage process to do it. First off, you need to do an R&D like tax incentive application with Oz Industry, which is part of the Department of Innovation. I say the Department of Innovation, I don't finish that sentence because each year I think that department actually changes names. They kind of pull things out of it and put things into it, but effectively it's known as Oz Industry. And so you would lodge your activities with them. You would talk about what your objectives were, what new knowledge and innovation you were developing, what steps you took and how much you spent. And then once they come back and say, yep, you're all registered, here's your letter and it's got a code on it, then you would detail your expenses as part of your company tax return, right? There are plenty of providers out there to help you through this process. For smaller claims, if we're working in really early, with a really early stage businesses here, shop around. Don't get lured into a big, heavy percentage-based fee schedule. There are quite a good number of operators out there who will charge you a reasonable fee for the work that's involved. Shop around would be my advice there. And so it works on a self-assessment model. And so for anyone who doesn't know what that means, is that, like when you lodge your income tax return, you might use your MyGov or, formerly eTax, you might do it yourself or you might get your accountant to do it, is that 9 times out of 10, it'll say you have this refund and you'll get it back in a week and nobody's really looked at it, right? But there is the chance later on that, if something was picked up and they wanted to take a closer look at it, is that they have the ability to do so, right? And they mean the Australian Tax Office, right? Is that you could have review or audit activities later on, right? So normally step 1 of that process would take about 2 weeks to get your approval through. Paying a tax refund can be anywhere from a week to 6 weeks. But it is a self-assessment model. So you could get the money and then be looked at later. So it's really important that you follow all the rules.
Cool. There's another question, Gareth, from Atula.
Yep.
Atula, do you want to ask your question, Atula?
Yeah, I have a question about EMDG grants, because from my limited knowledge, I thought they cover things like travel overseas, accommodation, airline tickets, and things like that to go overseas and sort of expand your export market. So how would that work in this COVID times when we can't travel anywhere?
Can you hold that question?
Okay.
The next slide will go through EMDG in a little bit more detail because it was really high level on that first page. But yeah, I will cover that because it is a very good question given that travel is basically null and void for now. Yeah.
Thanks.
Cool. Perfect. There's also a question from Shrikant as well, but what we'll do is we'll hold that one for afterwards because it's questions to the panel.
Sure. Okay, cool. We'll carry on then.
Perfect.
Cool. So I think EMDG is very much so it's to cover expenses in order to expand your market past Australia. It's for basically every other country except for New Zealand and North Korea. Okay, I know that's a weird mix, but New Zealand's obviously deemed as almost like an extension of Australia, and North Korea obviously we have a trade embargo with. So you're not actually allowed to legally do business with that country. So what it can do is there's 9 different categories. And so the question from just before, doesn't it cover travel? One of those categories is for overseas like marketing trips. That obviously is off the table at the moment, but what you can do, you can claim for things like if you were to register your trademarks and IP to protect your intellectual property in an overseas country, the legal costs to do that are covered. If you were to use Google AdWords or Facebook advertising to target an overseas market for your business, that's covered, right? There are 9 different categories. If you say, I can't get there, so I'm going to hire somebody to do sales in the UK, for example, that could be covered, right? You could actually claim the cost for that person as an overseas representative of your business. There's multiple categories. See, I'm doing a lot of talking here and I'm aware of the time frame. So by all means, if you just literally just go onto Google and said EMDG, categories, a document should hopefully pop up detailing them all. Once again, if you're in doubt and you don't know if you're eligible or not, give someone a call. You can call Austrade themselves and try and get some answers. They're pretty good on the phone, or find a professional who can help you. But yeah, unlike the self-assessment model, Austrade do an audit for each one before it's paid. So at least it can be an arduous process, but they are nice people, and they just make sure that you tick all the boxes, and that once you do, once you're paid it, there's no chance of it being clawed back. So it's kind of money in the bank, and you can rest easy on that one. Cool. So I think we'll change tax now and talk about like some sales and BD. I know, Indy, you have some thoughts here as well. What I'm seeing at the moment is that people are still spending, which is a really good thing. Like, I think everyone kind of went in March, April, and kind of went as COVID hit, and they're like, we don't know what this means. All big businesses kind of shut their doors and said, no, we're not spending. We'll put a freeze on everything, because no one knew what was going to happen. Now, I think everyone's got a pretty fair idea of what this is going to look like. So what businesses I work with are seeing, the following kind of longer sales cycles, smaller deals. So people who might sign on for 12 months are now probably signing on for 3 or 6, taking longer to make that decision. Customers who might have paid annual upfront for stuff before, now kind of going, can I pay monthly or quarterly? And they're just asking in general for more customer friendly conditions. So they might be asking for get out clauses in contracts and things like that. So I'm more talking on a B2B level here rather than B2C. But I think one of the key pieces of advice here is what I've given businesses that I work with is what you considered normal before, just forget about it, right? If these businesses are core to what you want to do, and businesses that you want to work with, businesses where you can be successful in working with them, then consider their side of things and be as flexible as you can, but not to the point where you lose the value for your business, right? So that there's no point going into a contract if you're not going to make money out of it, right? There might be other strategic reasons, but long and short of it is we all do this to be successful and to be profitable, at least mildly profitable. So yeah, but just flexibility is key right now.
Yeah,
and did you have anything?
Yeah, I'll add on to that as well. I mean, you're absolutely right. Like, yes, there are longer sales cycles, and the deal sizes are shifting. And I actually saw something recently saying, that there's Afterpay. There's now even like Afterpay for businesses, right? They're thinking for like flexible terms as well. And there's startups that are thinking of that and getting to that space now too, and putting those offers out into the market. But at the same time, I will say you also have to be careful about the different verticals as well, right? Because there are some verticals where there is a lot of activity, and there are obviously some verticals where there's some challenges. And depends on who you're targeting and how you're targeting them, because in some cases there is absolutely still opportunity that exists over there, where you can actually provide some help, and those things are rising, and the value may align as well. But I will say is, in terms of a tip, I would say keep making those connections. I think there's still a lot of ears out there and people willing to listen to what you have to say. At the same time, if you're in this case just getting started and don't have your first customers yet, then you probably want to start thinking about innovative ways of getting those customers. And what we are seeing is, so in some cases you have to spend to make money as well. So we are seeing that there are investments that are still being made, whether it's through marketing, whether it's through additional sales, to help you through that. So we are seeing that take place as well. The other thing you probably don't want to lose sight of is also your partners, right? Because if you are working with clients, in some cases, I think we're also in an ecosystem where we are helping each other out. We are founders ourselves. We are small businesses. In some cases, it's also helping each other out. And so if you're close to one client, for example, and you see there's an opportunity that doesn't fit your expertise, I think bringing somebody else in and helping each other out makes a difference that way as well, right? So just a few things to kind of add on to that.
Awesome. Great tips. So you can tell who's got more of a sales background than me. So yeah, thank you. That's good insight. As I said, not a sales expert, just know I see a lot of it going around. So yeah, obviously, in areas like hospitality and tourism, it kind of goes without saying. I did have a line in here going, depending on your industry or vertical. See if you're working with businesses, in hospitality or tourism, or any of those kind of deeply affected, verticals, is that it's a different story. But I think for the rest of the economy, it's good advice.
Yeah, by the way, there's one more thing I'll add on, just Gareth, as well, right? Because we are talking about cash kind of in COVID and cash flow, but will say that customer satisfaction, NPS, are also important. So, being in touch with your customers in terms of how satisfied are you, what you don't want to be doing is doing something, all of a sudden you're losing customers, right? So you definitely want to do those checkpoints to make sure your customers are happy. If they're happy, those are great conversations to have because there can be more opportunity, right? So you gotta be careful with that.
Yeah, absolutely. That's I can't believe I didn't touch on that one, to be honest, because that's what we've been kind of banging on about a lot with our B2B, especially our SaaS clients, right? Is to kind of go, it's really renewals mean everything right now, right? And expansion business inside your existing customers. It kind of means everything. If you can come out of COVID without losing any of your existing customers, you may not have gained a whole lot, but at least if you can keep your retention really high, is that you'll be in a really good spot for when the economy's bouncing back. So yeah, great advice.
Yeah, can I add something there, Gareth? Sorry,
of course,
to interrupt. Yeah, I find that a lot of startup founders there, especially the tech types, the developers who are developing an app or SaaS product, they're not very familiar or comfortable with LinkedIn. They use Twitter or there are others, Instagram or whatever. But LinkedIn is a really good marketing platform to make connections. So I'll say use LinkedIn to the maximum, even if you're not ready. This is the time to start making those connections and
build the network.
Build the network. Yeah. That's it from me. Thanks.
Cool. Thank you. Cool. So from a cost perspective, I think, it's all well and good to talk about how we get more money into the business, but I think the one key part that you can manage really, really well is the money going out the door, right? So I think one of the key things I'm seeing a lot of at the moment is that government and landlords and all these people are offering deferrals, right? And that's great if you're a business that is normally super profitable and that you're just having a month or two and will bounce back. Deferrals make sense. For everybody else, I think that I've got a few strong words here. Deferrals are not a silver bullet. They are not a solution, right? Is that they're a good temporary fix or an absolute last resort. But what it can create is what we call a debt. Call it a debt bomb, right? And so I don't know if that's a technical term, but kind of just it sounds right. But what I mean by this is that, for example, payroll, the State Revenue Office in Victoria is offering that a company doesn't need to pay its payroll tax obligations for the whole year. So normally a lot of businesses would pay every month, depending on your payroll, it might only be $1,000 or $2,000 a month. We can still a lot, but for a business of that size, it would be pretty insignificant, right? What they're saying is that you can not pay at all until next July when the year's over. And so what that is that you're not actually saving any money. There's zero return on interest rates at the moment because interest rates are so low. So it's not like leaving the money in the bank is going to make you a fortune, right? But what it does is that it can just push the can down the road, right? What is better to do than that is to either pay it now. If you can afford to pay it now, pay it now. If you can defer, if you have to defer, have a plan about what you're going to do when that deferral comes up. But the better solution is if you have to, if you need to reduce, improve your cash flow and you can't increase your incomings, then you need to reduce your outgoings. And reducing your outgoings on a permanent or semi-permanent basis is much preferred, right? And will leave you in a much stronger position coming out the other side when things start to improve for your business, right? So some areas you can think about. I've tried to be as high level as possible to try and tar as many people with the same brush as possible. People costs, is everybody at capacity? There are a lot of terms at the moment from a Fair Work perspective where business owners are being given flexibility to reduce hours and things like that. Explore that avenue. Obviously, keeping people in jobs at this point in time is really important. And it's a kind of an obligation that a lot of business owners take seriously. However, not at the cost of the business going under, right? So have a look at that. Office space, if you rent an office space, if you have a license at a WeWork or another shared working space, by all means negotiate hard, right? these, you know, these larger companies like have the ability to assist you. You know, show, I guess, you know, do it in goodwill, knowing that when things improve, you'll come back to them and things like that, but negotiate hard. A lot of people don't know what's coming off their credit card, right? So when I talk about subscriptions, it can be anything from your Zoom subscription, which is probably the most valuable one right now, through to, you know, streaming, like, you know, how many Netflix equivalents do you pay for? How many Microsoft Office subscriptions do you have? You know, have you had people leave your business and then not get cancelled? I often think, like, sometimes it's the only way you can actually get across this is either to use a specific tool or to cancel your credit or debit card. In order to then, when payments start to bounce, is that people will actually come to you and say, hey, you haven't paid for this, right? So I think it's really important to kind of pull your credit card statement out, download it off your internet banking, whichever way you like to work, identify what you still need and what you don't, and cull the unnecessary, like cut the fat, so to speak, right? Technology costs in general are somewhere where, you know, where hopefully, you know, you can have a close look at, make sure that you're using the right level of tech, make sure you're not overspending. Obviously, you know, devices that are remote friendly are key right now. I think given we're talking to technology people, I don't really need to go on too much about that, but just really understand what costs you have and what's, I guess, discretionary and what's not. And as I said, similar to the sales discussion, this is really a buyer's market. Don't be scared to negotiate on your costs. Cool. So I think one area we touched on just then, or very, very briefly, was people costs, right? So people kind of say to me, they're like, I really want to hire this person. You know, maybe you're a founder who's not a technical founder. Maybe you're like more business focused and you need someone to help you build something, right? So you need, I need this developer, but like he's really good or she's really good. But I can't really afford them. And so it's like their market salary is like $150,000 or something. That's way too much for me. What can I do? And so one of the key things from, like, you know, especially on that developer side or that I guess technical side, is that those people generally want to have skin in the game. When I talk about skin in the game, I'm talking about equity, right? And so what we see a lot of in early stage business, almost to the point where it's almost like mandatory, like in order to be competitive in the jobs market, is to offer what we call an ESOP, right? So employee share option plans. If you ever look on the ATO, they call them employee share schemes. It's kind of an old school term. Most people aren't offering share schemes anymore. They offer incentive plans or option plans. Incentive plans is just a fancy word for option plans for the most part, right? It just sounds good, right? It's a salesy kind of thing. So other you know, options, if you've got sales teams that maybe have, you know, are expensive, is that you could look at profit sharing, so that meaning that they get additional remuneration when they're making money for you, or commission-based payments, which is really, you know, what a lot of salespeople run on, right? You could look at that, you know, across the board and make sure that, you know, everybody's incentivized and that from a risk point of view, you are de-risked a little bit in that you're only paying high levels of payments if you're actually making that money, right? And you're making those sales and getting that revenue in the door. So I think something to look at, and this is really high level, right? ESOP is an area where I spend a lot of time talking to my clients because it's a really like complicated area. If you're an early stage business, a lot of startup people like laugh at this description, but this is the ATO's description of what a startup is. So not listed on any stock exchange, so not just the ASX, but any stock exchange, less than 10 years old and an annual turnover of less than $50 million. That is a startup in the ATO's eyes, right? So basically everybody, right? Unless your business is kind of sat there and you kind of registered a company like 10 years ago or something, and you never used it until now, like sure, that might, you know, have cause a problem. But other than that, you know, the version of startup or the description of startup here is incredibly wide. What that does mean though, is that under this, you're able to defer your tax right until the end. So what we used to have an issue with under the old rules is that you would kind of say to your employee, hey, I want you to participate in our employee share option plan. Here you go, here are your options. You know, this is a real incentive for you. You know, and they kind of get excited about it. And then they'd get to a point where some of this stuff vests and they start to own a little bit of the options, and then they have to pay tax on it. right? They haven't earned any money. They haven't seen any cash hit their bank account for this stuff, but they've got to pay tax on it, which is a real bitter pill to swallow for a lot of people. So it's quite flexible and something to be looked at. And the usual pushback I get from this when I mention it to clients is that, come on, is this not expensive, right? How can I afford to do this? I'm trying to save money, not spend money, right? The ATO a couple of years ago, when they released the startup concession stuff, so back in 2016, released standard documentation. They kind of put, standard docs together. It's a good starting point for a lot of plans, and I won't get into this because there's lawyers on the call and they're far more experienced with the actual documentation than I am. And what you'll find is legal firms, and this is not a plug, this is just factual, like people like the guys at Allied Legal will do, are able to do this stuff in a really efficient manner. And like, I'm not saying it won't cost you anything, because I wouldn't do that to them. It will cost you some money to set this up, but the more that it will help you save it in the long run, right? And getting it set up right, and keeping those key staff on board, it will just pale in comparison to the actual cost. So it's something, if you think it could apply to you, you're looking to bring in some gun people to work on your projects, but you don't necessarily have the financial capital to do so, could look to do this as an option. But yeah. That's a really high level basic understanding of that, guys. There are a million things we could go into today and dive into the weeds on this stuff, and you'd be here until 5 p.m. at least. And I'm sure everybody's got work to do this afternoon, including me. So obviously we tackled some questions, but if there are any more, I'm happy to take them. Otherwise, yeah, that's all I got, guys.
That was really good, Gareth, and thanks for that. One of the, just because you covered ESOPs at the end there, and there was a question asked, by Shrikant, what are some of the things that we're seeing with our own clients in terms of the way they are innovating in relation to cash flow at present, and ESOPs and incentive plans is certainly something that we're seeing an increase with, because a way to incentivize employees to ensure that they're rewarded for business growth without necessarily having to part way with your with the business's cash. So ESOPs is definitely something that we're working on 3 at the moment, and it's and we're seeing that it becoming a much more regular conversations with clients in terms of just how else can we incentivize employees, because I think most business owners right now they want to keep their employees on and do the right things by them, but find another way of doing it.
Absolutely. Yeah, look, I can agree. I think that's definitely one of them. I think to touch back on the sales point a little bit, so innovative things we're seeing customers do is just reinvent themselves from a sales perspective. Like a lot of companies get into, a lot of businesses get into kind of, this is how we operate. These are our standard terms. You more or less, you need to if you want to do business with us, you need to do this. You need to sign a 12 or 24 month contract. You need to do this, you need to do that, because that's how they've always been, right? And that's always been successful. And that's how their infrastructure internally is set up. So I think what we're finding is the ones who are doing really well are identifying either from a product or operational perspective, what do their customers actually need right now, right? What do they need right now? Is there a way to tweak their offering to make it more palatable? Is there a way that they can change their terms to make them more palatable and more effective for their customers or clients? And then I think from that, it's then an operational thing going, okay, we're going to switch all these people from annual, we send them one invoice and they pay a bill, right, to, oh, we're going to set up direct debit now because they want to pay monthly. And we know that from a scalability perspective, we can't be sending out all these invoices every month. We need to automate this. And that's, kind of where they come to us and say, Gareth, can you make this process efficient, right? And so that's what we would do. I think there's a lot of stuff happening on that side, a lot of, not necessarily pivots or anything like that, to use a startup term, but just like refining the offering and actually just talking to people and going, like, how can we help you better, help you more, or be a better supplier to you, right? So I think there's a lot there that can be done.
Yeah, and that's a really good point. I mean, the whole terms terms of engagement and going to market, that's again on the legal side we are seeing as well. So your point there is really valid, Gareth. I mean, you don't want to lose a customer just because normally you would charge them $5,000 upfront for the year if you can do that on a monthly basis, right? And a subscription based model. So thinking about things like that. Some of the other things that we are seeing or that we've seen over the last sort of 6 months, and one of the ones and something that has surprised us a little bit is that companies are looking to raise money. That hasn't, the momentum there hasn't really slowed down. A part of that is because some startups are now a lot more realistic about value as well, and the valuations that they're going to market with, and there are investors out there looking for attractive places to put their money, so that's something that has surprised us. In terms of the pivoting, I mean, and innovation, we have an example of a client that had a platform that was very much in the retail sector, focusing on sort of high-end fashion, and they changed their platform so it's more of a click and collect based service, where they're going to market now, offering their platform to any retail outlet that doesn't have click and collect, so that they can use this our clients platform. We're seeing a lot more innovation in terms of just people offering their services through online. So that's something that we've seen more of, and that includes in sort of the health and mental health space as well. So people are doing, as best they can, looking to find clever ways of getting to market. Collaboration is a big one, finding ways to promote one another, finding ways to go to market together, and agreements around that. And those are very commercial in nature. What works for two businesses in terms of trying to find ways to get to market, get custom, not just for yourself, but potentially for another business, and that creates cash flow for everyone. So we're definitely seeing that people are looking a lot more broadly, and that's kind of a cool thing to come out of all of this.
Yeah, people are getting creative, which is good, which is really good to see.
Yeah, absolutely.
Yeah, very true. Just on the back of Gareth's comments on the incentive plans and also the commission-based payments to salespeople, right? Whether it's large companies or small companies, in fact, it's actually interesting. It's not like there's less that people do. It's actually more that you do, right? Because what you want to do is you want to be able to kind of drive the right behavior. In some cases, salespeople are coin operated, right, and are motivated through that process. And if you are looking at, doing some pivots, whether it's operationally or on your product, and you're going through that, and you want to drive that behavior out to the market in certain markets, perhaps you weren't in before, creating the right incentive plan, not only the ESOP, but even from a commission level, what that looks like and how it's structured, whether it's on certain clip levels and the timing against that, all that kind of can make a difference in terms of driving more cash too.
Coin operated. I like that. I'm going to use that term.
Yeah, I like that too. I want some coin operated people in Silicon Beach.
So I think we're at 127 now, Tula. I think it's been interactive.
Yeah. Shall I stop the recording?
Yeah, sure.
We can still interact a little bit. So thanks to everyone who've been watching the recording, and thanks Gareth and Inda and Rahul and everyone else. We'll stop the recording there. You can see this recording on the Meetup events. Okay, just give me a second.